Here is a new weekly outlook. We have a lot happening from a fundamental perspective and even a lot of economic data that's starting to come out this week and next week. So there's a lot happening even with the market sentiment too. So let's go over the macro fundamentals first, the economic calendar, and then move on to the technical side. This week and even going into next week, really there's just going to be a lot of uncertainty in the market, and that's because we have a Fed cut coming, which is almost guaranteed this week, but the tone is expected to be likely hawkish. Global yields are climbing. The ECB is now openly signaling a possible rate hike, and Japan is becoming the world's newest volatility exporter because foreign traders are dominating the Japanese government bond market. So all of this creates a highly reactive market environment where the fundamentals and the market sentiment alignment becomes even more important, especially as we're moving into the end of the year. Starting off with some Fed news, we have the Fed expected to cut interest rates by another 25 basis points, but the tone is still going to be hawkish guidance, slower easing path into 2026, and a deep internal division with 3+ policy members expecting to dissent. Inflation is still sitting at PCE, sitting at about 2.8%, 2.7% actually. And then we also have the labor market that is weakening with ADP showing negative 32,000 jobs and the unemployment rate increasing up to about 4.4%. Consumer inflation is also expected to increase by 3.2% going into next year. So overall, the market takeaway between all these articles here is that the rate cut is going to set up a dovish tone, but the overall guidance is still going to be very hawkish, especially going into 2026. So the net impact here is that the US dollar still remains supported. The risk sentiment is also very shaky right now, or a lot of uncertainty. And then the yields are sticky to the upside. Moving over to the ECB side, we have an executive board member, Isabel, who openly said that she's comfortable with the next move being a hike. The growth outlook also revised to be higher. Sticky services inflation data that came out, and then we also have fiscal expansion in the EU, especially within the defense and the infrastructure industries, which is still inflationary. So now the traders are expecting, or the money market is expecting, that there is going to be a 30% chance of ECB hike going into 2026, with near zero probability of any additional cuts for the remainder of the year. So here the market takeaway is that the euro is going to find its medium-term support, as we have been seeing, especially with euro USD, but it's not bullish just yet. It's a hawkish shift that we're seeing, but it's not a full tightening cycle that's setting up from a fundamental perspective. Then we have news with JPY. The key developments here is that we are seeing about 65% of the Japanese government bond trading, which is now foreign. BOJ is stepping back from any bond purchasing. Japan's government, or Japan's debt, has equaled to about 230% of GDP. The yields are sitting at multi-decade highs, and the yen is it's flowing into the domination due to the geopolitical tensions that are increasing from Trump and then Russia and Ukraine talks, but it is still quite weak at the moment. So yen is also getting the strength simply because it's a safe haven asset, but from a fundamental perspective, from a solely Japan perspective, there's a lot of volatility that's still going on there. Moving on to the geopolitical side, we have Trump, who is starting to grow impatient because the three parties are not aligned on Donbass, and the EU wants tougher terms, whereas the US is starting to push Ukraine to actually compromise with Russia. The frozen Russian assets here are likely going to be used for Ukraine, totaling about a 90 billion euro loan for Ukraine's reconstruction. And so we're going to see how pretty much this develops here, because this geopolitical risk premium right now is supporting a lot of this risk off sentiment, because of which we're going to see with gold and even JPY pairs on the technical side, a lot of those intraday spikes. So we're starting to see that even the Japanese yen very specifically is starting to gain that risk off flow when these headlines are starting to escalate. So we're going to keep a very close eye on the geopolitical tensions here. This article is interesting because if you're starting to learn about market sentiment analysis and the current market conditions, then this article is going to be very helpful from an institutional market sentiment analysis. So here we have a lot of the Goldman Sachs clients who are starting to turn defensive. They're starting to see that the equity upside expectations have now started to moderate out, and the AI enthusiasm is starting to cool out as well. The main concern here is the unemployment overshoot, which is now leading into this potential recession risk going into 2026. So now what investors want is a proof of economic reacceleration to see if we actually have that economic growth to support that massive movement that we have been seeing with the equities and the risk on sentiment. So overall, across all of these macro fundamental articles, when you're going into Wednesday with the interest rates that are about to be released, we're going to see that the riskier assets are actually a lot more sensitive going into Wednesday's FOMC meeting. So with US30, NASDAQ 100, any of those equities on an intraday time frame, you are likely going to see those lower high formations and sell the rally conditions until the Fed actually delivers on Wednesday. Let's go ahead and move on to the economic calendar here and take a look at what we have coming out. So pretty easy week, as you can see, starting off. And then if you're trading the Aussie dollar, then you have interest rate news that's going to come out today in Asian session in a couple of hours. Then going into tomorrow, you have the BOJ governor who will be talking. So if you're trading London session or if you're trading like the London and Asian overlap, then that is one thing that you want to pay attention to, especially with any JPY pairs that you might be trading with GBP JPY, EUR JPY, USD JPY, all that stuff. Then on the US side in New York session, you have ADP weekly employment change that's about to come out. We don't have a time just yet, but most likely it's going to be around 5:15 a.m. PST or 8:15 Eastern time. And then we also have JOLTS job openings that's going to be coming out from the US. Some of this is delayed data, like here, for example, it says September data. And then we also have this month's as well. Going into Wednesday, that's the big day where you have interest rates coming out from Canada and then also from the US with the press conference. So we are expecting a 25 basis point cut. If that does end up happening, that's not really going to be a surprise. But we are going to be following the FOMC statement to see what is the guidance. Again, the expectation is that it's going to be hawkish. And then also how Powell answers the questions during the press conference. Then going into Asian session, again, for the Aussie dollar, you got some employment data. And then going into the London session on Thursday, you have news from Switzerland. So if you're trading any franc pairs, then you want to be paying attention to this. You got interest rates, which they're sitting at 0% at the moment. They're not really expecting a change here. And then we have Governor Bailey, who will be talking on Thursday as well, and off quite easy in New York session for the remainder of the week. So overall, from a market sentiment perspective and also all the macro fundamental analysis and economic data, before we move on to the technical side, the type of market sentiment that we're seeing is that for the dollar very specifically, it is still quite firm. It's supported by the rising yields and the hawkish Fed tone. When we're looking at gold, we're seeing weakness from the rising yields, but still the geopolitical support, and then same thing for the yen as well. Let's start off with the quarterly real quick for US30 because this is the last monthly candle for this quarter. We've already made a top wick. We're kind of just hanging around here. The expectation is that we're probably going to close around this area for this week. But when you start dropping down to the monthly time frame, you start to see that massive rally that happened back in April. And then last month, we started to exhaust out with that bullish volume, even though we did make a top wick rejection. This monthly candle just started forming about 8 days ago, but right now, we're kind of just sitting in this range. So what I'm going to do, and we are going to adjust this as we drop down to lower time frames, is mark off that top wick rejection. That is going to be a key level when we drop down to lower time frames. What I'm expecting to see at this level and even at this support is some consolidation, some fake outs, some clear liquidity sweeps. And then we're going to adjust our zones and levels just to narrow in as much as possible. The point is to mark off any levels that you know that price needs to break right now before it can continue on into the next level. So here I'm going to keep the same exact resistance at 48,100. That is exactly where we rejected and closed below on the previous weekly candle. And we haven't really been able to close above that the last couple of weeks too. This new weekly candle just started forming, but it's bearish. No top wick, barely a top wick actually. So I'm not going to mark off anything here just yet. Drop down to the daily time frame. I'm going to create a zone here. which is this resistance, and then extended over to the current price action. I see that price has been stuck here for a couple of days, so if price can break below that, then we have those longer term sells coming back down from about 47,700 down to 47,200, which is a 500-point move that we can potentially look for. If price just stays around here, then we're looking for those intraday scalp opportunities. So if price rejects this here, for example, on the 4-hour time frame, it came back and closed above the zone. If this 4-hour candle flips and then continues pushing back up bullish, as it breaks its own high, then we're going to look for those buying opportunities to come back up bullish from about 47, let's say 780 or even 800, to come back up into 47 or 48,000, which is going to be about a 200-point move, and a continuation up to reject from 48,100, so that gives you about a 300-point move to the upside. Drop down to the 1 hour, a gap happened here because the Asian session just opened up here. So we're expecting that price is going to hang around here, consolidate for at least Asian session, and then going into London session, we might get some movements and potentially just look for a zone-to-zone trade opportunity until Wednesday rolls around, and then we get clarity on where is the interest rates, what's the forward guidance like from the Fed, and all that stuff. So here, the fundamentals, again, the main things are impacting US30 is the hawkish Fed tone, which is going to put that downside pressure here on the equities. The bond yields that are rising, again, negative for the equities. The Goldman clients that are reducing bullish expectations. Now, that doesn't necessarily mean that simply the Goldman clients are the ones who are moving the market or that they have a massive impact, but that is just one aspect to show you what the institutional market sentiment is like at the moment and what the big players are doing or how are they advising their clients to behave. So right now the sentiment is pretty much risk off, going into the FOMC meeting with the short-term rallies that are also being sold, and we're clearly seeing that from these intraday levels, from the 4-hour, 1-hour, daily, all that stuff. Let's go ahead and move over to gold before we do any of the currencies. Gold, massive rally up. We got a massive rejection into that 4,400 mark, pretty close to that. So let's just say 43.84. That is simply the highest point that price has gone to. So we're going to adjust that when we drop down to these lower time frames as well. So now coming on to the monthly time frame, we had that massive rejection back in October. So now what I'm going to do is adjust this to the candle body opens right here. Because if price flips above that, then we know that for sure it's going to come back into that 4,400 mark. That's what we're going to be targeting. And here that is your 4225.7. Drop down to the weekly. That is exactly where the last week candle closed, and then the week before that rejected it as well. And then when we try to come back close to that, the week of November 10th, we rejected that as well and pulled right back down. We try to break above it, but quick fake out and then pull back down. So that tells me that when we drop down to lower time frames, I'm expecting to see more candle closures, fake outs, liquidity sweeps, all that stuff around this. My support here is going to be this bottom wick rejection right here, because if price can break below that, then I know that I'm looking for further sell opportunities to come back down into the support area right here. So right now, that's going to be my zone pretty much, or my range that I'm going to be trading in until price can break above 42.25, or it can break below 41.66. And even on the daily time frame, you see how the candles are consolidating, they're losing volume. So again, just waiting for what happens on Wednesday with the Fed meeting, and then also waiting for more developments on the geopolitical news. Let's come on to the 4-hour time frame, take a look at what's happening here. And on the 4-hour time frame, that consolidation becomes a lot more clear. So what I'm looking for here, even for let's say scalp opportunities or day trades, is price closing below this zone and then a continuation down, come back and fill that wick, or even tap into 4166.85. If price rejects this and pushes back up bullish, then I'm looking for a clear above 4200, which can take us up into 4225.7. So my bias here overall, even dropping down to the hourly time frame, 4-hour, my bias here is that I'm not looking for any swing trade opportunities unless price can break some of these key levels. So that way, because this is a multi-day consolidation that's pretty much happening here, I know that whenever price breaks out of that, there is going to be a ton of volume to the upside. So what I'm really seeing here is that price rejected into those previous highs, consolidation, massive sell-off. That's what's really brought price back down. close to that 3,900 mark. And then after that, I'm just seeing these higher low formations. So I want to see price pull back down a little bit deeper, maybe come back down closer to 4,100 or so in the long term, and then a continuation back up. So that way price can continue to come back, tap into previous consolidation areas, grab more liquidity, and then continue pushing. But for this week, I'm looking for those scalp opportunities, simply trade range to range here. Now let's go over to GBP USD. So here with gold, pretty much the sentiment is just mixed at the moment, and that's what we're going to be playing out. Looking at GBP USD on a quarterly time frame, we pushed all the way down here, which meant that we had some USD strength, and then we rejected all that, pulled right back up, but it rejected very nice into this previous consolidation area here and even the support area. So now we drop down to the monthly. We see that nice little support being formed here last month, and then price pushing back up this month here already. I'm going to mark off that top wick rejection, which is pretty close to this previous resistance here that price tried to break above, but really couldn't do that. So then we have 1339, drop down to the weekly. That is where the last week candle rejected. So if price can break above that, then I know that I'm looking for buying opportunities to come back up at the break of the previous weekly high, targeting about 174 pip move on GBP USD. If price cannot break past that and kind of just hangs around here, then a key level for me is going to be to see if price can break below the support. Look for some sell opportunities to come back and revisit into the support. If not, then we're just looking for a zone-to-zone trade. So even to this side, it's about 179 pip range. So that is 1.328, 1328 level, which sits clean into that consolidation, previous support. Drop down to the daily, again, a lot of consolidation. That's exactly the move that I'm expecting until going into Wednesday. Not a lot of clean moves here on GBP USD just yet. And then here is my zone. Drop down to the 4-hour time frame, and I start to see how there's a lot of rejection here. Candles closed and then rejected and pushed right back up. So again, zone-to-zone trade opportunities, you're catching about 30, 40 pip, 50 pip ranges within the zone itself. So those are quick scalps. I'm not really scalping any of these major pairs like GBP USD, GBP JPY, or GBP USD or Euro USD, but I will scalp US30 gold or even GBP JPY. Even USD JPY is a little bit slow. So now we come on to Euro USD monthly time frame. Same exact setup as GBP USD. You've got that top wick rejection here, and we'll just call it 1168. Drop down to the weekly. See a lot of consolidation, massive top wick rejection, pulls right back down into the support area, comes back and revisits into that 1168 level. We made a top wick rejection this week already, and then price pull back down, drop down to the daily time frame, create your support, which here is going to be the previous daily candle's bottom wick rejection. And if I look to the left, then I see that it cuts through this consolidation, sits right into the support area, right into that consolidation resistance, pulls right back up. But overall, I see a lot of rejections here. So that tells me that this is a very important level. I can either look for trade opportunities that head right into the support, or I can just wait for price to break out of this consolidation and then look for better trade opportunities. Drop down to the 4-hour time frame, very clean structure of lower high and lower low formations. And then the previous 4-hour was very weak. So here you're looking for a top wick and then candle flip coming right back down into 1162, which should give you about a 15 pip move or a continuation down for about 27. What I'm targeting with these major pairs is price breaking above this daily resistance and support. That way, at a minimum, I'm catching about 50 pips, continuation up for about 100 pips, and then if price comes back and revisits, again, very dependent on the fundamentals, then we're looking at about a 200, 240 pip move coming right back. Again, very dependent on the fundamentals. If we see that the Fed is quite hawkish, or we're starting to see that there's any sort of USD strength or weakness kicking in, then I'm expecting major moves on Euro USD or even GBP USD. Coming back to GJ, we have very clean setups here on GJ. I want price to break past the previous top wick right here, which is 208.3. And then if I look to the left, once price clears that, then I would be targeting a swing trade opportunity to come up for almost 500 pip move. But again, that is not that, I'm going to take a trade and just let it run for that long. I will be taking partials. I will be scaling in and all that stuff in between. But as you can see on a monthly time frame, that's really the next key resistance level right there. This month, we've already made a bottom wick rejection, so that's what I'm going to mark off and then adjust when we drop down to lower time frames. Come on to the weekly. So last weekly candle closed bullish with a bottom wick rejection, and then this week we've made a little bit of a bottom wick pushing right back up. If you are looking for scalps, pretty good scalp opportunity setting up here in Asian and even going into London session for about 64 pips. Drop down to the daily here. Adjust my level because I'm looking at what does price need to break right now before it heads down to the next level or up to the next level. So if price can break below that, then we're looking for sells to come back down into this previous support based off of the daily time frame, which means that we're looking at about a 66 pip move to the downside. If price continues breaking its own high, this top wick rejection, and then pushes back up bullish, then about a 46 to 50 pip move to the upside. I want to look to the left when price was above that level previously, which was back in 2008 or so. So that's why this is a very key level that price is sitting at, because price was unable to reach this area for over a decade now. So if price can break above this and then continue back up bullish, then even on the daily time frame, we can see that there's really nothing stopping it for about 82 pips, continuation up for about 173 pips. And then if it really turns into a swing trade opportunity, then you have about a 600 pip move to the upside. If you're looking for sells, then again, not much that's really stopping price from coming back down for about a 60 pip move first, which is this, and then a continuation down into a very key level where price was consolidating. Once it tapped into it, that's really when we got that momentum to break the high. So that tells you that this is a very key level here. And we're expecting a lot of volume. So at least a sell opportunity to come back down for almost 84 pip move. And let's check out our final pair for today. USD JPY already made a bottom wick rejection, so that's what I will be marking off, which is 154.3. Candle body open, 156.3. Drop down to the weekly time frame, and I'm going to adjust this to sit right on top of this previous high, 156.45. And then come on to the daily time frame. So when I zoom out, I see that this was the previous low that price tapped into. And we know that there was a ton of volume. That's exactly what price did here. It pushed up, came back, consolidated, pushed back up. But overall here, the structure is still quite bullish, where you've had a support, and then you've had these higher low formations, and then a massive gap that the market has yet to come back and fill. But due to the fundamentals, we've had that massive rally up, tapping into those previous highs, which was right into that consolidation area. Hence that deep pullback, the profit taking that happened, price ended up creating a support. And now we're looking for some sort of a bottom wick rejection and then continue pushing back up. At the bare minimum, we're looking for trades to come back into 156.45 or even a little bit higher to come back and revisit into 158. But again, this week is going to be a little bit slow up until Wednesday when we get the interest rate news from the Fed. And then next week is also important with more interest rate news that's going to be coming out. That's pretty much it for today's weekly outlook. The action plan that we are going to be following is that before the interest rates come out, so between today, tomorrow, and then even New York session on Wednesday, before interest rates are released, we're going to avoid any sort of heavy positioning. We're only going to play the intraday continuation moves that are happening for all of these pairs. We're expecting a lot of fake outs and liquidity sweeps. So quick scalp opportunities, nothing that's really going to turn into a day trade or even a longer term swing trade opportunity unless the technical side aligns on the higher time frame. So that means the daily time frame, 4 hour, 1 hour. But anything on a 1 minute, 5 minute, actually we don't even trade 1 minute, but like 5 minute, 15 minute, 30 minute time frame, those are just going to be those scalp opportunities. When the interest rates are released, the first move, I'm expecting massive wick rejections, a lot of fake outs. I'm expecting that's going to be on the 5 minute, 15 minute. So as soon as news is released, but about 5 to 15 minutes after news is released, I'm expecting the real direction to kick in and start looking for trades there. After the news is released to go into the end of the week, into Friday, we're going to follow those trend continuations on USD JPY, US30, gold, GU, and EU. And we are going to keep an eye on GJ to see if there's any sort of move that's happening there. So for this week, make sure that you're not over trading, you're not revenge trading, make sure you're not blowing any accounts, use proper risk management, that 1 to 2 or 3% risk management per trade. If you guys have any questions, just feel free to message me on Instagram at SharmaFX or even comment below. I will see you guys for the next weekly outlook. Have a great rest of the week.